Hello and welcome to this week's episode for the stock market update brought to you by Conservative ETF Investor. I am your host. My name is Ken. Today's date is September 24th, 2017. And here we are on the homepage for Conservative ETF Investor. And once this video is done, I'll upload the link right here so you can click on it to view it. Scrolling down, you'll see our current recommendations right page. And our current recommendations, the most important part that I want to bring forward to you right now is our posture. We're still on hold. And here you can see our transaction dates, our price on transaction dates, our current closing price, and then how much profit and loss each position has and so forth. Our total we have a total of all of our dividends so far is at 2%, and now I'll show you how well the portfolio has done. By the way, here's our ETFs. There's one ETF that we don't follow. It's a mutual fund, which is this one right here, just because that I can't find a comparative ETF for doing the same thing as this particular one. Okay, so since the portfolio has been created, it is up 10.41%, and since calendar year 2017, it is up 6.55%. You add the total dividends to that, which is let me see here, where are we? Total of all the dividends, 2.09. To that, and then that will give you your total return. So you add the 2.09, and then since inception to the 10.41%, that'll give you the total return. Okay, now we're going to jump right into our charts. Our first chart that we want to look at is the S&P 500. We use stockcharts.com as our charting service, and I use a 5-year chart, weekly chart. You can see the word weekly right there. The symbol is SPY, which is the spiders for the S&P 500 ETF. So this is the same thing as the S&P 500, except this is an ETF that you can actually buy as opposed to just the index, but it tracks the index pretty much spot on. Okay, now you can see that we've been trading in this upward wedge pattern for quite some time. We've bounced off the bottom and we're getting to travel upwards again. You can see here in the last candlestick here in the thumbnail how we've moved up. The weekly gain was 0.10%, which is a very small weekly gain, traded in a very tight, narrow range, but that's what it is. We use two momentum indicators. The top one here is the MACD, moving average convergence divergence at default settings, and then below that is slow stochastics at default settings. Here in the thumbnail, you'll see that on the MACD, the MACD is below its signal line, but it's beginning to cross over it from underneath, which is a bullish action. The slow stochastics is above its signal line and above 80, which is both bullish actions. So we're on a hold posture. With this, I just put a sell recommendation in case we were to break this support line here, but as of right now, it does not appear that we are going to be breaking support. Let's move down to our next chart, which is VEU. VEU is the Vanguard all world excluding the United States. Okay, and it had a positive week, gaining 0.35%. By the way, if you want to see your percentage allocation, you come back over to your portfolio and you see that we should have a 10% holding in this one. It's 40% in the S&P 500, 15% in real estate, and 25% in this income fund, which, again, this is a very conservative portfolio overall because you're well diversified here. 40% in U.S. equities, 10% on world outside of the United States equities, 15% in real estate, and then 25% in an income fund. So it's pretty conservative. Okay, let's get back to our charts. VEU was trading in this pattern here, this wedge pattern upward trading pattern. You can see how it was hugging that a long time and then just so bullish it went up. There was a tops resistance line past that, past this upper edge wedge pattern here, and then kind of came down below it, fell back into it, but has since been riding above it. Now it's in this trading channel right here, and it is right at the upper end of that trading channel. Seems somewhat unsustainable. It looks like we're going to do a little bit of drifting is my expectation, but so far so good. Hold recommendation. You can see the MACD is smoothed out, and the slow stochastics is above 80, and it's just been bouncing around above 80 for quite some time here since the beginning of 2017. And you can see how well this ETF has done since the beginning of 2017. That has just been really, really fantastic. You can see right here that since 2017, right about here, it's gone up 19.45%, which is excellent. Okay. So that's VEU. Our next chart is VNQ. VNQ is the Vanguard Real Estate, which stands for, it's a REIT, Real Estate Investment Trust. Okay, ETF, traded on the New York Stock Exchange, symbol VNQ. Had a net down week, down 2.35%. Let's get the thumbnail over here, and you can see how terrible that week has been. Now, we've had these weeks in the past. Here, all right, let me get rid of the inspection mode for a moment. Here you can see we've been trading in this pattern for quite some time, and it's been very consistent. Hit that resistance line, come down, actually came down, broke through the support line a little bit, and then came back up, down, up, down, up, down, up, and now it touched it. You can see this right in this point right here where it just came up, touched it, thought that it may have the momentum to break through it, but it did not, and then came slamming down in this 1 week. Now we've seen that over the past couple of times, and during that time you'll notice that after 1 or 2 weekly losses, then it finds its bottom and then it begins to come back up the ladder, comes back down, comes back up the ladder, comes back down. But there's one thing I want to point out. You'll see the bottom here. Let me point that out for you right there. And then that's a higher bottom. And then right there is a higher bottom. And then right here is a higher bottom. So it'll be interesting to see if we do not take out these bottoms here, then the pattern is creating a higher bottoms pattern, and it eventually is going to break through this resistance line and come back to test this tops line that's right here. That line looks like it's a little bit out of angle, but let me just fix that real quick, because I just can't stand when it's not at the right angle. Let me just fix that. It won't take about a second. All right, it looks like it's closer to right about there. Okay, yes. All right, so if we can get above this line, then we should be able to have clear skies up until this resistance line, and then potentially hit some more resistance to see whether it's going to break through it or come down through it. Okay, so but right now we're on a hold recommendation, and we're waiting to see if we can hold support and get back up towards this resistance line and go from there. All right, our momentum indicators. Let's see, the first one here is the MACD, and it's just been traveling back and forth through that signal line, but the range has been narrowing. So something's going to break eventually. It's either going to break up or break down. Because the bottoms are rising, and if you look at the chart here, you can see that this whole thing is just kind of coming up. I should redraw this line and put a line in there, because it looks like that's going to be a new one. As a matter of fact, let's just go ahead and do that right now, because it really looks like that's going to be the case. All right, so what we'll do is we will take this line out, and we will put in a new trend line from, let's call it here to there, kind of like that. Now, a lot of people would say, well, why don't you go down here to the end of this tip? And the reason why I don't like to do that, I prefer to use the opens and the closes as for my trend lines, and I try to get more touches. I just think it's more accurate that way. So that's how I play it. Um, okay, now you can see that support line was coincidentally also there was a declining tops line based off of this point and that point right there that I'd put in, and you'll notice that this declining tops support line, once it goes above it, which once was resistance now acts as support, is coinciding with this rising bottoms support line, two support lines from two different trajectories. So the probabilities is high that we should hold support at this juncture, at this support line right about here, and then come back up to test this resistance line again. And my expectation is eventually we will get above this resistance line. If my prediction is wrong and we are to break through here, well, then the next area of support is down here just below 80. And if we were to break that support line, well, then it gets really ugly. Then you're down here to $74 a share, and you could keep going until you find some support. But thinking that that is not the case, but we'll watch, and we're watching it, and we're waiting to see what's going to happen. The slow stochastics momentum indicator has reached a top and has broken through its signal line. It's still right at 80, but it's going to more of a neutral to bearish posture. And last week's action did not help it at all, and that's why it did that. So we'll have to wait and see how VNQ fares over the next week. Next week will be an extremely important week for VNQ. Okay, now look at our 25% OSTIX, which is the Osterwise Strategic Income Fund, and had a positive week, gaining 0.09%, and it also paid a dividend right there. Okay, so that is for OSTIX. We have two more charts we want to look at today. The last one is the VIX. The VIX is the volatility indicator. See right here, it's the index VIX, volatility index. And it's an inverse indicator, meaning that as the VIX goes down, the S&P 500 goes up. I've got a chart of the S&P 500 SPY down here at the bottom. So you can see as this comes down, the S&P 500 pretty much goes up. As this goes up, the S&P 500 goes down. And here I've got two moving averages. I've got the blue is the 50-day EMA and the red is the, the blue is the 50-day EMA, the red is the 200-day EMA. The blue is below the red and the index is below both indicators, meaning, and you can see how the 50 is being dragged down towards the indicator. And because this is an inverse indicator, as this goes down, the S&P 500 will go up. So this is positive for the S&P 500. The environment is ripe for the S&P 500 to continue to grow. Last one we want to look at is the VXN. Now, this is another volatility indicator, the volatility index for the NASDAQ 100. Now, here, by the way, on the volatility indicators, I don't use the 5-year charts. I use a 1-year daily chart. So the chart's different than the other ones that I was looking at. Okay, now here, the 50-day has just crossed below the 200-day, and the indicator is below both of those. So this is bullish for the NASDAQ 100. So the NASDAQ 100 is now looking bullish. I did not show you a chart for the NASDAQ 100, but let's go ahead and take a look at a weekly chart for the NASDAQ 100 just to see what it's doing. Last week it had a poor week of losing 0.97%, but it is fairly strong index. We were trading in this wedge pattern on the NASDAQ 100, went up above it, and it's been riding up above it ever since. I've got two trend lines here, a 17-week EMA and a 34-week EMA. Looks like it bounced off the 17-week and then has gone up and is still riding up above it. I do see a little bit of conglomeration happening over the past 3-4 weeks where it looks like it's reaching a topping pattern. It has come down. You do see the index has gone up while the MACD has come down. That could be considered a negative divergence. The slow stochastics is above 80, but it looks like it's reached a peak and it's coming down to cross its signal line and go negative. I don't know. I guess it looks more neutral than anything. It doesn't look like it's overly positive to break out. Anyways, I just thought I'd wrap up with that last one there. Okay, so that's going to do it for this week's episode for your stock market update. Again, this is brought to you by Conservative ETF Investor. Please check out our webpage and our YouTube videos. My name is Ken. Thank you for watching.